Good afternoon, everyone. Welcome to today's webinar. I can see we have participants drawn from all over East Africa. This is the East African Women Lawyers Committee Law Series, and we are very pleased to welcome you to this seminar, to this webinar. My name is Angela Munga Mwadumbo. I chair the Women Lawyers Committee, and I will be the moderator for today. And we have our host, Ms. Hafsa Sasia, also in attendance. She's the Deputy Treasurer of the East African Law Society and our representative at the Council. Both of us, and on behalf of the entire East African Law Society, we welcome you to this webinar. So today's topic is Emergence of Fintech and Other Digital Trends, Disrupting the Traditional Banking Sector. Before we start the webinar, some few housekeeping rules. First of all, if you have any comments or suggestions or remarks, you can post them on the chat section. You can also introduce yourself or network, because this is a forum for all lawyers across and other participants across the entire East African region. So you can take this opportunity also to network, so you can introduce yourself on the chat section, or if you have any comments or observations to make. Then we shall have a plenary session at the end, that is after all the speakers have finished their presentations. But should you have a burning question, you can post it at the Q&A section. Then our topic today, just to remind ourselves, is on the emergence of fintech and other digital trends, disrupting the traditional banking sector. So what is fintech? The fintech is derived from joining two words or two phrases, that is financial services and digital technology. So in a nutshell, fintech simply prompts the use of digital technology to offer innovative products and services such as mobile payments, alternative finance, online banking, overall financial management, including investment and all other transactions. So with fintech, we find that all financial products have become easily accessible. They have become cheaper, and there's reach to all people of all walks of life, as long as they have an internet connection. But what has that got to do with the traditional banking sector, where people, for you to get any financial services, you actually had to go to a bank and get those services, but now we have them at the tip of our fingers. Where does that leave the traditional banking sector? So to help us navigate through that topic, we have a panel of very eminent speakers who are knowledgeable in this topic. We have we have the quintessential banker, we have people very knowledgeable in fintech, and we also have one of the leading lawyers leading advocates in the fintech sector. So we have 4 speakers. I know some of us might have seen a flyer with 3 speakers, but we have 4 speakers, and the 4th was a surprise and a pleasant addition to all of us, such that now we'll have a view from the fintech sector, and we'll have a view from the legal sector, and a view from the banking sector. So I'm going to introduce the speakers as and when they make their presentations. Our first speaker is Faith Pella, who is very passionate about fintech, and she will talk to us about the definition of fintech, alternative currency, and all services that are available in fintech. So Faith Pella is an accomplished tech and digital transformation enthusiast. She has over 15 years experience working in the fintech and strategic digital solutions in all sectors, especially in banking and agriculture. And for more than 10 years, she has focused her career to enhance digital and financial inclusion in Africa. So her career began as a finance officer. Then she transitioned to business development, business strategy to county manager, then grew to regional roles in the position of global head of risk and compliance, and later as chief operating officer in one of Africa's leading fintech and digital solutions company. And she has held various positions in the fintech world. So Faith, over to you. Just give us an overview of what animal this fintech is and what cryptocurrency is.
Thank you so much, Angela. Every time fintech is mentioned, I really get so excited because it's something that really matters, and it really matters to, the current economic and social position in most of African countries. And it's something that actually really touches each and every person's financial position or situations in life. Now, I got introduced to fintech, I think around 2008, 2009, and it was something so new. Even I never understand what really is at that particular point of time. But as much as we know, financial technology really, fintech is more on financial space and then the technology space. But basically, before I used to think fintech is actually let me put like it's a product or it's the backend technology in the banking system. But looking into it, actually fintech really is more of customer-oriented services, banking services that's really touching the. Yeah. So sorry about that. So with the fintech space, really, actually is really triggered. It's a sector that is really triggered by the economic situations, our social life, our economic life, that really is really driven by the financial service or the financial sector. Now, the traditional banking has done so much, has done a lot, and there's been so much evolution of the banking industry to where it is today. Now, the rise of the fintech is actually really like, fintech has become the key part of the startup ecosystem in the world, because given the economic crisis in 2008 to 2012, it really triggered a lot of new companies coming up to really offer financial services in a very small scale, leveraging on technology and also on the digital innovation. Now, thinking of fintech, it's more of triggered based on like I say, social interaction. Our social interaction was really, really impacted with the coming of Facebook, the high five. Like, people started interacting and engaging more easily, more frequently. I remember that time with Facebook coming, the social networking, like the communication and interactions become like so real and so close. Now, with that, there was also a trigger in terms of access to financial services, access to people to be able to transact. Now, putting that together, technology really stirred up the disruption or the changes that we're seeing in the banking sector from the traditional banking, the brick like branches and ATMs, and people started like moving. And for Africa, which one of the best stories we can put, the disruption really started with the introduction of mobile money. Mobile money that isn't up transactions, but now the mobile money is also moving from not just being cash in, cash out into something else. Now, just to sum that up, So while most of the traditional banking or the banking business was focusing more on asset ownership, the fintech startups, which brought the fintech into picture in disrupting the traditional banking, actually was so much focused on the customer side. Fintechs own the customer's needs when it comes to financial services. The banks currently, we see they are moving onto that space. Mobile money is no longer about cash in, cash out, send money, receive money. It's more on how do we offer financial services that we see more of the microservices are coming in place. Now, putting in that is like the fintech sector is actually not a complete disruption, but I would like to sum up with the definition that I always like to use when we're explaining what really fintech is. As I said earlier, it's not a product, it's not a backend technology, but we can sum up by saying, I like the way Investopedia always keep it, and I think there's also a definition from IMF, where they say that it describes new technology that seek to improve and automate the delivery and the use of financial services. At its core, fintech is trying to help companies, businesses, owners, consumers better manage their financial operations, processes, and live by utilizing specialized software and algorithms that are used to computers and increase smartphones. Fintech, the word is, as we say, combination of financial technology. Now, that's kind of triggered me so much because I once listened to one TED Talk, and this lady was explaining that fintech is actually any company, any organization, any society, any community can develop their own fintech, because we are currently doing that. In Tanzania, we see Vikoba, we see Vikundi, and SACCOS groups and all that. They're enhancing financial services among the communities, among the group of people, without having an intermediary bank. And the only thing missing on the Vikoba and Michezo and all that is the technology. And that's where the fintech startups come in to create a technology within that. Now we are seeing the banks, we are seeing the mobile money operator building something around that. So in a nutshell, any company, any organization can be a fintech. Today we see FMCG companies giving loans or offering credits to their distributors, to their retailers, so that they can make sure that they have enough stock in their shop for the goods to be sold. Because there is no access for loans, no access to credit to facilitate the provision of stocks in different retail or distributor shops. What is happening, the FMC have decided to give financial service in terms of loans and credits to these businesses so that they can sell the goods. Then they produce the goods, the demand is there, but the supply is limited because of lack of loans, lack of credit to facilitate the goods to be in the store to fulfill those demands. Now, FMCGs are also becoming, what I can say, they're providing financial services. The very good example I like to use is the monkey shop. I remember when I started my life, when I started my career, my first job, I was always, my salary could never meet the next salary. So I had this monkey shop. I would just say, hey, monkey, can you send your boy to bring me so-and-so? The guy will give me things on credit from time to time. And when I get my salary, I will always go back and pay monkey. And I remember at that point, I was so consistent in repaying that loan because I know another 16th or 20th date will come that I don't have enough cash to manage my expenditures. Then I can go back to monkey to get flour, to get pasta, or to get oil or something like that. Monkey was offering me financial services. It's a loan. He was giving me credits in terms of goods for me to be able to manage my cash flows. So if you look at that, fintech is more than just a technology. It's more than just a disruption, but it's actually a service. It's coming to bring services, financial services in people's life in a more simplified. I like the way Angela on the brief about fintech. You know, it's to simplify, creating convenience, flexibility, quick, you know, like fast financial services to the people. Now, Fintechs help financial institutions to offer more innovative and digital banking services. And if you know today, and I'm really happy to see this happening in Tanzania, that banks are partnering with fintech companies to really offer services. Nowadays, I see there are a lot of credits, micro loans coming up, micro credit services, micro insurance is coming up. It's been facilitated by the technology, by the innovation, and, you know, by the giving access so that these services are able to be provided in a more seamless way. Because of the immune, or not only financial sector, by the central bank, you know, by systems and structures, you know, the traditional banking services, it's kind of difficult for, you know, big banks or commercial banks to really offer fintech services because you know, their DNA is not allowing them to be that flexible the way the fintech startups are. So to create that flexibility, to be so much of customer oriented, really brings up that innovation, that convenience that we're really seeing fintech is actually offering to the market. So I would like to repeat this again. Fintech is not a product, because I see a lot of things. I have a fintech product, I have a fintech product now. I don't like to use that way. Fintech is a service. Fintech came here to provide simplified, flexible, fast financial services, you know, to the people, leveraging on technology, leveraging on, you know, ideas, imagination. You know, someone can just imagine, like, oh, what if I get this? I remember a few days ago, I was talking to someone and say, like, you know what? I want to build a house, but I don't want to take money from the bank. I wish the cement company could give me a loan in terms of, can give me a loan in terms of cement. I go to hardware shop, I get everything that I need. I get a company that's doing real estate in terms of construction to give them that. And, you know, the bank can just finance it, get all these things done. The moment it is done, I co-own the house with the bank as a collateral for me to be able to repay. Because that makes my life easy, because I don't have time to be chasing the foodies all over the place and all that. So if you look at fintech in the broader space, it's not just a product. It's really touching people's life, people's financial needs, not financial want. We want money, but money is to service or is to do something. So fintech really, as a financial technology, is more of servicing, is more of product of providing the service when it comes to financial needs, when it comes to, you know, financial demands to the customers. Now, just a little bit, I would like to speak on the part of crypto. Crypto is just a digital currency, which is not it's not backed by a central bank. Because, you know, currently Tanzania shillings is backed by the Central Bank of Tanzania, maybe in Nigeria by the Central Bank of Nigeria, Kenya, Central Bank of Kenya is backing the Kenya shillings, the Naira and the T shillings, the rands and all that. But with the cryptocurrency is a virtual currency that is actually backed by technology. They call it like the blockchain or the cryptography for security purpose. And it's really difficult to counterfeit this because it really operates on the blockchain technology that kind of creates ledgers, independent ledgers that are locked, and it's like it connects from the source of that funds to the where that fund is to where it's going to end. So for Tanzania and for Africa, I think it's something to explore, but personally, I'm curious about it. I want to be part of it, but I'm yet to understand the whole, how it works. You know, sometimes I have a group of people right now, we're really discussing crypto. The fact that I know now in Tanzania, we can do crypto transactions. I joined Binance, I joined a number of these companies that are providing crypto today, and really trying to understand like how it really come into play in everyday life. For me, it's more on it's more of an investment facility, a very high risk investment facility, are using cryptocurrency and getting into the crypto world. But I would like to touch base. For me, I'm really looking forward for when the central banks really is launching our digital currency, like a digital Tanzania shilling. I'm really looking forward to that, because it's going to make life even more easy. Because today, if you look for a fintech to operate in providing financial services, they need a mobile money here, because they need to convert that cash into electronic. It's very costly. They need to link it to a bank, which is even more expensive, and then everything makes it so expensive to the customers. And one of the reasons that fintech really gained so much traction is because of the low pricing, the easy channels to access the financial services, and very more transparency, no bureaucracy for you to really access a loan. Today, I can just get the call or go to an app, and I'm able to access a loan, apply everything online. I don't need to visit a branch. Now, things like that kind of make the fintech really look like a disruption to the banking industry, but definitely it's a complement. Fintech is here to complement, given the fact that it is more on the customer needs. It's more of a customer oriented solution. So if Tanzania or maybe other countries, Nigeria launched their own digital currency sometime last year, I think we need to see more of that, because everybody now will be banked with the central bank, because it's an electronic money. You have it, you can do your purchase, you can send it to somebody else, you can loan somebody else, you can do a lot of things within that when it comes to electronic or virtual currency, when it comes to the country, because a digital currency, a shilling digital currency, means that it is backed by the central bank. There's a backup for that money with the central bank. But with the cryptocurrency today, you don't know the source of the money. You put your money and you don't know where it is. It's somewhere in the cloud. And anything happens to it, that's why we see many people losing so much money as it happens. But that's just a summary from my end. I hope I didn't take so much time, but thank you so much.
Thank you very much, Faith, and especially for letting us know that fintech is not a product, fintech is a service. So our next speaker is Annette Kasabele. Annette will talk to us about emerging fintech innovation in the region and the impact, whether real or apparent, on the traditional banking sector. Annette is an international development economist. She's a subject matter expert on financial sector policy, regulation, and supervision, with a focus on technological innovation, digital finance services, and fintech. She's particularly interested in the regulatory and supervisory implications of technology for financial inclusion, market development, and compliance. She works as a policy specialist in the United Nations Capital Development Fund, that is the UNCDF. At UNCDF, Annette leads projects on fintech ecosystem development in Rwanda and Tanzania, open digital option of basic in North, Central, and West Africa under the UNCDF. Annette worked in Nairobi, and before BFA, she worked as a consultant with Deloitte Consulting Limited in Salah and Analysis Group Incorporated in Boston. Annette holds a master in public administration in International Development from Harvard Kennedy School, and a Bachelor of Arts in Economics from Wesleyan University in Connecticut. Annette, take it away.
Thank you. I hope you can hear me, Angela. I lost internet for a second, so I'm not sure if I'm still audible.
We can hear you.
Yeah, we can hear you loud and clear.
Okay, good. Thank you. Good afternoon, everybody. And I think I'll spend just a few minutes building on what Faith has spoken about and really sort of like share some examples of what we are seeing across the region. And us as UNCDF and other development partners or ecosystem supporters are doing to support the fintech innovation. So just to build on Faith's definition of fintech, I also wanted to add on sort of like a bit of additional layer of differentiation among the fintech startups, because from where we stand, we have been looking at this space and trying to categorize the different players, again, because the definition is one of those that is evolving, but we are trying to bracket different type of players in the ecosystem. So we did a study in both Tanzania and Rwanda, where we were looking at emerging innovation in the financial sector, zoning into fintech specifically. And in there, we kind of like came across two main groups of fintechs that are operating in our markets. So we do have those that are called core fintech. Essentially, these are the likes that interface with customers directly, the end users. So the likes of you and I, who do direct financial services transactions, or we sort of like, access different services through those type of companies or startups or establishment. But then you have those ones that are not visible to the end users like you and I, but they really facilitate the traditional financial institution in providing services or reaching out to their end consumers. So these kind of like fall into the bracket of the enabling fintech. So for instance, some of the services maybe you are able to access on your banking platform or from your whatever provider. At the back end of it, there might be another company that is providing that service to enable you to access a specific function digitally. So I just wanted to kind of like add that layer so that as we talk about the different emerging innovation within the fintech sector, we have the context and where some companies are mentioned to be fintech, we can kind of like try to place them in those two angles. One could go a bit further on like even the enabling type of fintechs, look at it from those ones that provide financial services to, they provide technology services to financial services providers, the likes of banks and whatnot. But then you have others that do provide technology services to the regulators. So these, I'm sure for some of you who kind of like engage in the financial sector and the evolving technology innovation, you might have come across the different terms around Reg Tech, meaning regulatory technologies, or SupTech, meaning supervisory technology. So these are also technology company, but they tend to engage more with the regulators to sort of like either help make the process of compliance much more efficient, to make it easy for providers to fulfill that requirement, because we do understand this sector is heavily regulated, and with that they are supposed to be providing information to the regulatory bodies on regular basis, whether it be monthly, quarterly, or annually. And how do you facilitate that seamless information flow between regulated entities and regulators? So there's also some additional companies that kind of like cover that space. So with that kind of like a context and background, I would like to zone into some of the work or the innovation we are seeing in the space. I think it's kind of like tied to what Faith was also talking about. How do we see fintechs disrupting our markets? Because we see most of them, they are providing similar services to what a traditional bank would provide, It's just that they would have that additional layer of technology that enables them either to reach sort of like last mile customers that probably are quite expensive for a bank to actually access or reach them, or probably beyond just the cost of reaching these customers, probably the transactions are just too small to be viable for a big institution to go for them. So we start seeing beyond just them coming in to disrupt the market, we are seeing some collaboration between some of the fintechs and the banks, whereby fintechs are using the rails of the banking sector to be able to access customer, because at the end of the day now, it's not clear who owns the customer. Is it the fintech that is actually interfacing with customers, or is it the bank institution that has to fulfill all the KYC and actually hold the customer information? And based on our study, so we conducted a study in Rwanda in 2019, where we were looking at the landscape to kind of like looking at it from 4 key metrics of the ecosystem. And this was really zoning into the startup ecosystem. We kind of like stayed away from some of the established fintechs. I think Faith had mentioned the original fintechs that we are all familiar with in our markets. So these are the mobile network operators. So we stayed away from them, but we are looking at more of the new and upcoming startups. And we did a similar thing in Tanzania. And in that, we are also looking just beyond who is the player in the market and what verticals of the financial sector they are on, but also looking at other aspects of the ecosystem that support their growth and innovation in general. So we were looking at skill sets and talent within these markets. And I also share the links on the chat at some point of this report for anybody who is interested. So we are looking at the talents. We are also looking at demand, whether there is also traction of these products in our markets, because we know that most of these fintech startups, you require fast scaling, and being in a market where you can actually reach a sizable number of potential customers is key for you to be able to grow faster and offer services that you are setting yourself to do. But we're also looking at capital, and I think it's one of those businesses that is tech heavy. It grows fast. You require quite amount of big financial muscles for you to be able to move at a faster speed and grow and be able to actually deliver value to your customer. And lastly, we're looking at the regulatory environment. How are these newcomers joining the market? What are the frameworks that we see in the different markets on how regulator engage with innovation, if at all? So in case of Rwanda, I think probably the statistics might be dated. So this, like I said, it was 2019. We were able to identify about 44 fintech startups, which are kind of like falling into 5 or 6, if I remember correctly, different value verticals of the financial sector. So you would have some companies that are operating in the payment and remittance sector, so whereby they've come to kind of like disrupt or partner with financial institutions, the traditional banks who would facilitate digital payments, and they're coming into that space. We had a number of companies in the lending and credit vertical, where they do offer loans to a greater extent, micro loans to customers, of course, leveraging on alternative data, because we do understand in our market, a lot of us do tend to have in files, in the sense that we don't have enough data to be able to be assessed for credit worthiness. So these, you see a number of companies that are coming into that space, instead of relying on traditional income type of data, but how can we leverage other types of data? So for instance, your network through your phone communication, or other things, your transactions in other areas. How do we use that to actually be able to assess whether you're credit worthy? And we are also seeing a number of companies also are playing in the savings type of like vertical, whereby they are mobilizing savings from micro savers and be able to link it maybe to banks, or some of them kind of like linked to the investment platforms, probably like touching now more on the retail investors. And also there are some that are looking at personal financial management type of tools, whereby they offer you services to be able to track your transactions and sort of figure out your transaction habits and how you actually manage your funds on month-to-month basis. And similarly, it's kind of like the same can be sort of like extrapolated to Tanzania, because in Tanzania we were also seeing in those 5 or so type of verticals, which is expected in our markets, because we would see a lot of players actually in the payments and remittancy, which now seems to be like an entry level for a lot of these fintech startups, because I think it's much easier to forge partnership with different operators and be able to build on top of the existing rails. So building on top of mobile money infrastructure, or building on top of banks infrastructure to be able to offer payments seamlessly. And I think in Tanzania, we do have some examples, I think, or even in countries like Rwanda, some of them that have made such headways in the market. So for Nala, I think for those who are based in Tanzania, you might be familiar with companies like that who have come quite recently to kind of like disrupt that payment and remittancy type of space that had been occupied by a number of traditional players, and now you have people like that. On the lending and financing, I think we see a lot of like interesting innovations there and models. For some of you might be familiar with the likes of Jumo. Like I said earlier, these are the kind who focus more
hello,
on...
Anne.
Yes?
Anne?
I can hear you. I'm not sure if you can hear me. Hello?
I think it's Angela's network, because we can hear you.
Okay. So shall I continue? I can just wrap up in case it's
Yes, please. Yes, please,
to wrap up. Yes. So those are the kind of like innovation that I was highlighting in our region. So we still see that there's over concentration on some of the like earlier verticals, the ones I was citing, like payments and remittances or lending and savings, but there is still a huge gap in our markets where we are not seeing innovation yet, particularly when we talk more around investments. For instance, there are pockets of players in that space, but I think the market could benefit from additional players. I mentioned earlier, those who kind of like operate within the regulatory space. We don't have a lot of like Reg Tech or Subtech type of startups operating in our market, which is an additional gap that I think could be occupied by some newcomers. So I think I'll pause here, and I'll be happy to take questions or dwell on anything specific later on. Thank you.
Thank you very much, Aneth, for enlightening us on areas where fintech has really prospered, like on data collection, on credit worthiness. We have savings, payment and remittance, and we also have lending. So now we'll hear from someone from the banking sector who will tell us a bit about whether the traditional banking sector is feeling threatened with the emerging trends, because as Annette has told us, there are services, there are fintech services ranging from payment, remittance, and lending, and these are generally the traditional areas where the banks were featuring very strongly. So Esther Manasseh will take us through that. And Esther is happily married and is a mother of 4 children. Apart from her family responsibilities, Esther is also a leader with the Lena and Force for Change, and she has more than 15 years experience in banking. She's currently part of the Stanbic Bank executive team overseeing the digital transformation, a journey which Standard Bank Group is taking to transform towards becoming a platform business. Some of the solutions that are housed under her department include vehicle and asset finance, financing, card and payment, insurance, mortgage, lending, saving and transactional, and investment products, supporting retail, corporate, business, and commercial clients. She's also in charge of partnerships and innovation for the bank. And in the year 2020/2021, she was awarded by WIMA among the top 50 women in management. So Esther, tell us whether at the banks you are feeling threatened by fintech. Welcome, Esther.
Thank you very much, Angela, and good afternoon, everyone. The big question here is are banks having their own Kodak moment or not? I would like to thank the previous speakers, Faith and Annette, who have really touched on a lot of the backgrounds that I wanted to cover today in terms of areas that fintechs are currently playing. So my focus will really be around what should banks do in dealing with fintechs. And I really like the way Faith positioned fintech as a service, because the moment you view fintech as a service, there are many ways that banking sector can really look at either be setting up fintechs of their own or really partner with fintechs. But when you look at the numbers in terms of areas that fintechs are currently playing, like Annette alluded to a few minutes ago, you'd realize 60% of it is really touching on the retail side of banking, looking at the retail clients. And I would say about 20 to 30% looking at the consumer and sort of commercial banking clients, and very little, and that is around, if you look at the data, around 10% to 15% looking at the corporate clients. So if you look at the penetration of fintech, I would say it's still very much focused towards retail clients, and maybe that's really continues to be a good opportunity for banks. In terms of services, Annette has really captured that well, services that are currently being offered by fintech. If you look at how banking sector has responded to the fintech disruption, there's been different ways. So if you look at the data, about 7% have actually launched their own fintech in ways of actually them trying to deal with the threat. About 10% have decided to acquire fintech companies. About 20% have decided to partner. Another 20% have decided to invest through venture capital, and 43% have looked at actually, form their own incubation and acceleration program. But the way I would look at it is, and really, I would say, I've been in banking sector, as you can see, for many years, but in the fintech world for only around 1 year. So I normally try to say that I'm not as experienced as the previous speaker when it comes to fintech world, but I really understand the banking sector. And some of the things that I think banks should consider doing for them to be able to deal with this disruption and threat are just some of the things that I would like to highlight today. Number one, I would say, is for banks to start changing their cost structure. So for most people who are in banking and maybe on the call, you'd know the cost culture for bank is really short term. 1 year, if there's any new product or services that has come in, a budget will be set, and people, the banks will look at the return on investment on that product and service. But I think for banks to be able to really survive in the new era, they need to change their cost culture when it comes to innovation. As we all know, innovation is long term. We keep speaking about M-Pesa and the success of M-Pesa, but most people would agree with me that that M-Pesa did not come and succeed overnight. It took a lot of investment and time for us to see the benefits that we're seeing today. So for banks to really, if they want to become players within the fintech world or the innovation world, they need to relook their cost culture and look at it long term. Another thing, and really invest on things like innovation, research, and development, and be ready to actually deal with the pain that they'll have to face maybe for 4 or 5 years before you actually start seeing the benefit. The other thing that banks need to take into consideration is really change their view on partnership. I think it's become evident and clear, and we've seen that in the recent years, that partnership is going to be a way to operate going into the future as banking sector. So banks need to look at strategic as well as distribution partnerships for them to survive. If you look at the banking penetration in Tanzania economy, it's less than 40% in comparison to mobile companies. We have a very little penetration. So there's a need for us to look at ways we can partner with fintechs, either for us to distribute existing banking products or for us to see how we can service the customers through strategic partnerships. Another area that banks need to really focus on is around people. And for me, this is probably number one in trying to change the mindset of bankers, moving them from the banking mindset to start thinking and developing a startup culture. As Angela alluded to earlier, banking, as we all know, was a building that you go to get services. And most bankers are still stuck in their own old ways. So there is importance for banking sector and leaders sitting with the banking sectors to really think of ways to start, training their people and getting them to start getting off the banking way of thinking into a startup way of thinking, and to see how you can start moving people from the old things, like, there was a lot of manual work that was done at the bank, a lot of staff sitting at branches, and really to start developing future-ready skills, where you have more data analysts, you have more developers, you have more people focusing on really improving customer experience. You have more people who look at innovation and coming up with new products and solutions that can really solve the actual problems. And I think Faith spoke about this. For banks to stop thinking of issuing loans, but really providing a house to really look at the actual need of a client and not a financial product that is sold, and really getting off the old way. And for banks to start transforming themselves digitally in terms of the solutions and products that they offer. Because if you look at the strength of fintech, is that ease use of these products and solutions, and at a cheaper price. So if banks still want to survive and thrive in this new era, is for them to see how they can transform themselves digitally and really look at how they can lower the cost of actually purchasing and accessing the products for the bank. Another thing that banks need to look at is compensation. And this is really looking at the statistics and data. When it comes to the way banks compensate their employees, is really looking at the salespeople front end and rewarding revenue that comes in. But in this new era, technology is as important as business. So if you look at companies like Microsoft, Google, Twitter, the way they reward their IT people in terms of the fixed pay and variable pay is quite high in comparison to banks, big banks like Goldman Sachs. So for banks to be able to retain these good talents that they need to be able to survive in the new era, they need to relook at their compensation mechanism and embed IT and developers as part of actually the front end staff in understanding the customer's pain points and solving for them. And that will really help to retain the key talents that the bank desperately need to be able to survive the new era. Some of the other things that the bank need to consider is really solve for beyond banking need. And here I'm talking about some of the solutions that have been built to say, if you want to solve for ecosystem, for example, I'll give an example of a solution that has been built by Standard Bank, which is One Farm, solving for agriculture ecosystem. And when you solve for that, when the way they've looked at that is for banks to be part of that ecosystem, to be a universal player and say, how can I help these farmers get seeds? How can I help them get fertilizer? How can I actually help them mechanize the agriculture? And by doing that, automatically banks get to benefit because some of these solutions are embedded in the banks. But then apart from that is really solving for the actual needs of the clients and being part and players within these ecosystems. And that's how, by developing the ecosystem and growing the players within the ecosystem, banks are able to also grow. So banks have to start looking at beyond banking needs of the clients. And I think if you look at the data, banks have access to a lot of data. They know where you go to, maybe for drinks on a Friday evening. They know where you go for shopping with your kids. They know what you normally buy. How about partnering with those people to actually solve for and really finance the clients? Faith gave an example of a mangi shop. So if banks had embedded themselves in that, they would actually bridge that gap and provide that bridge financing to Faith, for Faith to be able to access whatever she needed at that mangi shop. So it's for banks to start looking at the beyond needs, beyond financial needs of their clients. The other part, which is, I think it might happen in future, and we've seen fintech playing very well, is fintech have been able to unbundle some of the bank's products. As Anne spoke about, it's some of the products that are being offered by banks like wealth, insurance, lending, and things like that. So banks can actually think of maybe unbundling some of the products for them to really be able to survive and thrive in this new era. And we've seen some of the banks actually doing that, to say, set up a different company that will just look at wealth management needs of the clients, and maybe another company to look at insurance needs, and maybe another company to look at mortgage and things like that. It's probably something that banks can start doing. In terms of, I think what really binds everything together, today we're speaking about fintechs and disruption to the banking sector. But I think the actual disruptor here is a client. A client has really changed. Clients have really changed their view. When they go to Instagram or to WhatsApp, there's a certain customer experience that they get that has changed how they view service. And that is really what has caused them to start preferring fintech over banks. And what banks will need to do eventually would be to say, how do we ultimately improve client experience so that we can survive? Because clients, at the end of the day, we always say it in banking, customer is king. But really in this new world, customer is king and queen. They are the ones who determine whether banks will survive or not. Because if we do not focus on improving customer experience, if we do not invest in customer care, if we do not invest in producing products and solutions that are fit and convenient to use, it will become very difficult for banks to actually retain the revenues that they've been gaining over time. And we always say there needs to be a good mix, because, for example, a bank like Standard Bank that has been in existence for more than 150 years, there needs to be a good mix between developing the existing products and solutions, and I think banks need to consider that. I would say 60 to 70% of the investment that the banks make should be in developing the existing product and solutions, because you still have this engine that needs to continue running. And then about 20 to 30% in actually coming up with new ideas, and that's where innovation plays a key role. 20 to 30% of the investment needs to be focused on actually building new solutions that will be able to really solve for client needs. And about 10 to 20% think of how we can actually turn those new solutions into new revenue lines for the banks. And that's the only way that I think banks will be able to survive in future. I wouldn't really, and maybe another point that I think is important and one that we don't do much as banks is to look at co-opetition, which is really cooperation. And most of the time banks look at each other as competitors. But I would say in this new era, there are many ways that banks can actually cooperate and work together and coming up with solutions that really solve for client needs. We've seen a bit of that, but we need to see more of that going into the future. I would like to pause there. I'm happy to take any questions or comments later.
Thank you very much, Esther. I'm glad that you have said that nowadays customer is king and queen, emphasis on the queen. And we really appreciate the insights that you have given us from the banking perspective. And key is that they need to be more innovative to catch up and to keep up with the other forces in the market. So we have talked a lot about fintech and finances. And we all know that with the finance, anything to do with finance, there's the other arm of regulation. So with these very innovative services and products and customer experiences, is the law able to regulate fintech? Is the law and fintech moving at the same pace? So to guide us through that discussion is Nzilani Mweu. Nzilani Mweu is the founder of Rilani Advocates. This is based in Nairobi, Kenya, and she has over 10 years experience of policy, regulatory, and transactional experience in telecoms, digital financing services, technology, competition, data protection, intellectual property, and commercial sectors. She's also the co-founder of My Comply Kit. This is a platform that provides access. This is a platform that provides access, sorry for that, provide access to advice on data protection and tools of compliance. She has been the Kenya expert for data guidance on data protection and cybersecurity since 2019. She has also been actively involved in shaping policy in Kenya on the right to privacy, cybersecurity, and fintech-related issues in Kenya, and has published articles as well as conducted trainings and participated in various local and international fora as a speaker on these subjects. And Nzilani is a member of the East African Law Society, the Law Society of Kenya, and has previously served as a member of the Intellectual Property and Information Communication and Technology Committee of the Law Society of Kenya. She's also a member of the Lawyers in Technology Circle, whose membership comprises of leading women in technology in Kenya. And members, just to notify you that the chat section is now active, so you can post your comments or reactions, and you can even introduce yourself on the chat section. So Nzilani, tell us about whether it is even possible to regulate fintech. Over to you.
Thank you, Angela. The bit of speaking last is everyone has spoken about the introductory bits of fintech, so my work is really easy right now. But to go back to a bit of the introduction, and some of the reasons fintech has taken root and succeeded in Africa is actually regulation. Existing regulation is built around brick and mortar financial institutions, so the banks, microfinance institutions, money remittance services. And so when fintech comes in and there's innovation and there's ways to do all of those things that banks were either doing using the longer routes that take too long, that need licenses, that are also restricted by the terms of those licenses, then fintech thrives. And so as part of the reasons that fintech has grown is because a lot of people are not able to be served by regular financial service providers like the banks, which is why when you talk about fintech and the rise of fintech, there's always conversations about banking the underbanked or the unbanked. And Africa has, let me speak about East Africa particularly, there's a lot of underbanked and unbanked people. And a lot of people do not have access to a bank account based on the amount of information required, based on the fact that you actually need to have some money for you to have a bank account. There's also the fact that banks would not be able to give you perhaps like a quick loan or any credit based on the fact that you do not have enough money in the account or you do not have security for that account, which is a gap that lending fintechs have easily filled, because all you really need to do is open an account and be able to borrow. Again, regulation has made it very, not really hard, but also a bit challenging for things like money remittance, where you would actually need to go to a licensed brick and mortar institution for you to deposit the money you need to send, and then have that money sent to somebody else in a different in a different place. It's even harder if you want to send that money cross-border. Then there's remittance companies and payments company fintechs that have come in and made that very easy. You can transfer money from your bank account into an app, and if you want to transfer that money to anyone across the world, you can do that. Cryptocurrency has also, as an unregulated service, has also made remittances very easy, because if you're holding, say, $100 in crypto and you want to send that, say, $100 to someone in Nigeria, you just send them the crypto and they're able to convert that, to withdraw that into Nigerian fiat, and it's instantaneous. So part of the challenges that we faced with regard to the slow pace of financial services, which has been changed by fintech, has been on the basis of the regulation that exists. I just want to paint a picture of how big fintech is in Africa. I think Annette spoke about the major fintech services that are flourishing in East Africa and in Africa at large, which is in payments, money remittance, then there's lending. There's also wealth tech, which she talked about, which is asset management, online brokerage services, financial data analysis services. Of course, there's cryptocurrency, for which Kenya has been cited as the most active, with the highest number of cryptocurrency investors. Then there's digital banking, which has not really taken root in Kenya and in East Africa, but Nigeria has been doing very well with banks like Carbon, Kuda. There's also Atom, and I think Revolut in the UK, which, as we speak about licensing later, I'll give an example of them as, licensed digital banks. In terms of figures, the fintech industry has grown like exponentially since 2018. For example, in 2018, fintechs in those 4 or 5 major services raised over $357 million. By 2021, the figure had risen to over $2 billion US. So you can see with those figures just how big the fintech industry is, and just how much money there is in investment. And because there's room for growth, there's room for new products being introduced into the African fintech space. There's a lot of money that would benefit Africa, and the services would also benefit a lot of the people who require fintech services in Africa. And then, of course, because Africa has been rated as having the youngest population across the world, it's the perfect time for Africa to embrace technology, because we have improved internet penetration. There is a high uptake of use of mobile phones and smartphones. And there's also, because of the age of the population, the value for convenience and ease of doing business. Now, regarding existing regulation that to some extent does regulate, yes, law can regulate fintech services, and there are some existing regulations with regard to certain fintech services. For example, Kenya and Rwanda have the Payment Systems Acts. I think Uganda has the Money Mobile regulations, which I'm not sure if they are in effect yet or not. Each of these countries also have anti-money laundering laws in place. And Kenya also recently passed the digital lending regulations, I think sometime early this year. There are some areas of fintech that have been really hard to regulate. And this is not a conclusive list, but some of them include cryptocurrency. For cryptocurrency, because the biggest reason it's not regulated is it's not recognized as legal tender. And so without that recognition, it's really difficult to regulate cryptocurrency, even though it's involved in money remittance, it's involved in payments and all other sorts of financial services. There's also general cross-border transfers of funds, which a lot of fintechs are able to support without actually needing the traditional money remittance license from the central banks. There is digital lending to a certain extent because not all countries have come up with digital lending regulations. And then, of course, there's wealth tech, which would fall under in Kenya, that would fall under the Capital Markets Authority. And there's really no regulation with regard to some of the technologies that are coming up with regarding management of wealth. However, there has been growth in terms of creating room for wealth tech, particularly in Kenya, which I'll touch on a little bit later. There's also the fact that some of the innovations do not really fall under any of the possibly regulatable spaces. So some of the innovations do not fall under a proper banking license or a proper microfinance license or a proper money remittance license. And then it becomes very difficult because those specific licenses and the existing regulations with traditional financial services are not flexible enough to allow for innovation. Granted, some institutions have been able to innovate. For example, with like StanChart, you can actually open a bank account from the comfort of your home on your phone and upload all the documents and get a bank account. However, you still need to go to the branch to provide certain KYC information, which you've already provided as you're opening the account, which really does not become a digital bank or a fully financial, a fully fintech service, if you think about it. And this is because of the restriction provided by the existing regulation, and the banks and microfinances and other regulated financial institutions have to comply with. Then one of the major issues with compliance is also around anti-money laundering. And this is specifically a major issue with fintechs, because I will give an example of several cases that have happened in the last few months. I know most of you have heard of Flutterwave, and Flutterwave getting its accounts frozen in Kenya, based on allegations that Flutterwave was enabling card fraud and money laundering transactions. The same thing happened with a company called Ping Express. Founders are Nigerian. The company is founded in the US, I think, but the founders are actually jailed for a cumulative 8 years for also enabling financial transactions that were considered, money laundering, and not tracking them, and not also implementing their own money laundering policies, as they stated, because they had limits as to how much they would allow, but allowed some transactions to go beyond the limit. So with those examples, you can see the major issue of money laundering with fintech, and also the same thing happened with Binance. A few months ago, there were issues about Binance, which is a large. If you've not heard of Binance, it's one of the biggest crypto exchanges in the world, based off of the US, but operating across the world. They were also accused of facilitating a lot of transactions, over 274 billion transactions in what was considered money laundering. So one of the major issues with regulation in fintech is definitely money laundering. And for most legislation, money laundering, most countries, money laundering legislation is really limited to traditional financial service providers. There has been change, like, for example, the Kenya Anti-Money Process of Crime and Anti-Money Laundering Act was amended recently. And so it covers a lot more transactions, basically covers anyone who's involved in financial transactions, which is a step in the right direction and will probably help with curbing all the money laundering allegations and issues around fintech. There has been another issue that shows that there's really slow pace with regard to law moving at the same pace with development in fintech is regulators in Africa, and particularly in East Africa, have been very slow to create room for innovative solutions. So if you do have a fintech idea or a fintech product or a service, and it does not fall within the 4 or 5 specific legislations that cover traditional financial services, then you cannot get a license. There is nowhere for you to try your services. You either operate in a gray space, or you find partners who are regulated and find ways to integrate with them and provide your services. This makes it very difficult for fintechs to actually get into the market and operate, because then it's operating in a gray area in such a strictly regulated sector means there's the risk of getting in trouble with the regulators. There's the risk of you not also being able to do your financial reporting regarding AML, because you really do not fall under any of the reporting institutions. So you do not have an obligation to do any reporting. So that leads to self-governance and self-regulation, where most fintechs have put in place their own AML reporting, their own KYC reporting, just to try and match up with the requirements that are required of traditional financial institutions, for which they cannot be licensed similar to. Then another issue with that is very slow with regard to development of fintech and law is there being no specific consumer protection regulations with regard to fintech. Banks, microfinances, and other regulated institutions will have specific consumer protection guidelines. There's also the general consumer protection laws, I think, across each of the countries in East Africa. However, one of the major issues with fintechs is consumer protection. If a fintech is not licensed and there is no oversight body over it, who protects the customer? Who protects the customer's interest? If a customer has a problem with a transaction or even loses money in a transaction, where do they go to if they're not able to go to, if that issue is not resolved by the institution? Again, not all fintechs are out to self-regulate as well as they should. So consumers are left unprotected, and they're left with no recourse except to work by faith. And if you choose to use that product, you take full responsibility for any consumer protection issues that might arise. So now, I'd say the way forward with regard to regulation would be several ways. I think the most important, particularly because the regulators in East Africa have been very slow to adopt innovation and to adopt change, and to also review legislation to, allow room for growth outside of traditional financial services. The one important thing would be collaboration between, regulators and fintech associations. There's a fintech association in Kenya. I think there's a fintech association of Africa. I'm not sure if each of the East African countries has a fintech association, but it would be very good for regulators and fintechs and VCs and lawyers to collaborate and, constantly review the growth pace of fintechs and where it's going, and come up with ways to accommodate all that innovation and new products. There's also enhancement of the scope of reporting institutions under the all the anti-money laundering laws across the region. Like I said, Kenya has really improved its own reporting institutions, which is a step in the right direction. I'm not sure if the other countries have the same kind of laws, but the expansion of that requirement means even if you're not licensed by the, say, central bank or any other regulator, you still will have an obligation, for as long as you're handling financial transactions, to report your AML policies, to report any suspicious transactions, to comply with certain KYC requirements, which would improve the risk factors that are associated with fintechs. Then there is also what we call principle-based and collaborative regulation, which encompasses creating sandboxes, which is basically creating room for fintechs that do not, fintechs or innovations or solutions that do not fall under the regulated spaces to perhaps get a trial license, or to also get a trial period where they can try the product with a select section of the population, with the full supervision of the regulating body, without also having to comply with the traditionally require, set requirements for financial institutions. This gives room for, fintechs to try the product, and for the regulator to actually see this product works and possibly work towards creating a collaborative and enabling regulation for such products. I'd want to mention that some of the leading collaborative and principle-based regulators have been with the UK, that has the Financial Conduct Authority, and also has, I think the Bank of England has a fintech accelerator that just allows fintechs to come in and try the products, and with funding, in a vacuum, in a regulatory vacuum that allows them to grow. In Kenya, the CMA, the Capital Markets Authority, also came up with a sandbox, which I think is very beneficial for innovation in wealth tech. There's also the option of allowing a special category of fintech licenses, if perhaps the specific service or product does not fall under regular financial service regulations. A special license could be, created to allow room for growth in the fintech space, and also to allow for innovation. Regarding consumer protection, there's room to create certain regulation with regard to compliance, particularly in payment services, to protect consumers, because ultimately with financial services, the consumer stands to lose the most, because it's their money, it's their finances being transacted with. One of the best examples is from the EU, where and I don't think there's any other country there's any country or region that has a consumer protection directive or law that covers financial services, but in the EU, there's the Revised Payment Services Directive, which is, I think, a 2015 directive, and is basically a requirement which includes all fintechs and includes fintechs and includes banks, basically regulated and unregulated financial services, and requires them to report any cyber fraud, has guidelines on KYC, has guidelines on money laundering regulations and process of crime. So that would be also a good way to go with regard to consumer protection and covering, protecting consumers where financial services do not fall under the boxes of regulated financial services. The other thing is with regard to cyber fraud. Fintech has, sorry.
Yeah, and you wrap up so that we get to.
Sorry, I'm about to close.
Plenary. Yeah, maybe 2 minutes so that we get to the plenary.
Yes, 2 minutes stop. So I'm about to close.
Okay, thank you.
So fintech has also come with a rise in cyber fraud and cybercrime. I'm sure you've all seen a lot of the stories about, SIM swaps. There's stories about loss of login credentials to your accounts and, having money stolen or getting calls from fraudsters. So inclusion of fintechs, usually cyber threats will be reported by regulated institutions to cyber to the cyber related regulators as well. So inclusion of fintechs into the cyber reporting and cyber reporting institutions, as well as to the reporting channels, would be very beneficial with regard to regulating fintech. There's also now finally adoption of Reg Tech and Tech. I think Annette spoke about it. And Reg Tech is just designed to help financial services to provide providers to maintain regulatory compliance. Most services in Reg Tech and Tech are around KYC, anti-money laundering, risk management, and fraud prevention. And these would benefit both the regulators and the fintechs, and with regards to monitoring and reporting. I will stop there. I think I've taken quite a bit of time. So I'm happy to answer any questions after this.
Very detailed presentation. I think it's very clear from all the presenters that the emerging trend is that all of us, or every sector, every stakeholder, needs to be very innovative and creative in how they are dealing with the fintech and all the emerging products, even from the regulatory point of view. You've seen the suggestions that Nzilani has informed us about, things about sandboxing or provisional licenses and such things. Now let's move to the plenary session. I've looked at the chat section. There was a question on sandboxes, and I think Nzilani has touched on that. On the Q&A section, there are quite a bit of questions on cryptocurrency, and we are privileged to have amongst our participants one member who is very well versed in cryptocurrencies. So Winnie Wambugu, I'll enable you to speak so that you can maybe talk to us about, I'll give you 2 minutes to enlighten us about cryptocurrency, what it is, what it entails, and how, like the question that has been asked here by Jika, Zankia, Kevin, about considering the functioning of cryptocurrencies for transactions to be carried out. What can you say about the future of fintech with sorry, not that question, about cryptocurrency generally and blockchain. Winnie Wambugu, unmute and talk about cryptocurrency, 2 minutes.
Okay. Thanks, Angela. Nice to connect with you here, and also Zilani, nice to reconnect. Well, just by starting to introduce myself, I'm Winnie Wambugu, a global and legal regulatory advisor with Xinity. As defined by Nzilani, it's a global wealth tech, so to speak. We offer a platform where you're able to trade. We have CFDs. We are able to create contract. You're able to trade on contracts for difference, for forex. All this is regulated by the CMA, and it's highly risky. That being said, I did hear the risk aspect really being spoken about by the speakers here, especially on crypto and blockchain, believing that your money is in the cloud, is not backed up by any currency. I just wanted to point out that most cryptos that are being used around the world, they are fiat-backed cryptos. What this means is that fiat is hard currencies, such as the USD and the euro. So most people around the world who are trading or transacting or making payments using crypto, they're using USDT, which is either backed up by the US dollar or by euro. When it comes to blockchain, this is rather a very big topic. Zelani tried to touch on it. It's about the ledgers and how it's decentralized. But I did post even this morning on my LinkedIn that we do need to have a discussion on regulation on decentralization, because the only thing that blockchain does, despite being something that is in the internet and pretty new, it just creates ledgers that can be able to be mirrored and be checked. It's verifiable, it's immutable. So sort of the security that you seek in blockchain, okay, in any other written contract, you'll find it in blockchain. And so to speak, they're being referred to as smart contracts. So the risk aspect is very well covered by blockchain. The only other question is which software provider would you go to be able to give you a blockchain that is pretty secure, noting the internet sort of terms that we do have. So that's a different cybersecurity topic as Nzilani put. So I just wanted to touch on that. The second one is on crypto regulation. As said by Nzilani, yes, it is difficult, but however, it is doable. We have very many countries that have regulations on digital assets. They come up with virtual asset operator regulations, virtual asset provider regulations. We do have those, and I do think in Africa, East Africa, including Nigeria, our regulators are pretty shy, and I think it's just the risk aspect. But I do think they should pull up the socks and maybe collaborate with us, as has been said, and we'll be able to come up with not only sandboxes, because even a sandbox needs the regulation. It needs to have the minimum requirements. That sandbox that the regulator needs to have for them to be able to test the software, to be able to see that it's okay. There's a regulation and a requirement that is required. As Nzilani has put PSD2 in the European Union is really clear on that. So maybe we can be able to borrow a leaf on that. So that's all I wanted to speak about. If I had more time, there would be more to share. Maybe we can have another panel discussion on this sometime. Thank you.
Thank you, Winnie. We've had you on having as another forum for this. I guarantee you will take that under advisement. So there's also another question on the Q&A section. This being a forum sponsored by the East African Law Society, we are Pan-African. This is a Pan-African organization. So one of our members wants to learn a bit about Nigerian Fintech, and I will direct that question to Faith Pella, one of our panelists. Then after that, I can see one of our attendees has their hand up. We'll get to you after that. So Faith Pella, just briefly tell us about Nigerian Fintech. Faith? Okay, as Faith is gathering her thoughts, Nzilani, any insights? Oh, sorry. Yes, Faith is here. Yes.
Yeah, apologies about that.
It's okay.
Yeah. So I think this is regard to the question raised about the fintechs in Nigeria, right?
Yes.
Okay, so to me, Nigeria was a very, I can say, was a huge experience when it comes to the rise and the spreading of the fintech space. As we know, fintech is not regulated in so many markets, and I think the regulation of the fintech space started from around 2019, 2020. That's when, like, the fintech space in Africa, the regulators started looking at how they can regulate that. But as I said earlier, I now understand why it is hard to regulate the fintech space, because fintech is not a product, it's not a technology, it's not an institution. Fintech is about reaching people. And if you put that, it means that you just need even to regulate when you are giving credit or you are giving a loan to a person or to an individual, or an individual giving you, or an institution giving you a loan or a credit on services or on goods. Now, with the Nigerian, one thing that I really learned from the fintech space is that they were really solving real life problems of people. And they had a very good support from the banking institutions and other financial services provider for them to ride on their infrastructures, leveraging on their technologies in their imaginations and ideas to be able to offer fintech services to so many people. I remember one of the fintech company in Nigeria really helped me so much to save money because it was so simple, it was so easy, but they were supported with one of the banks, even is here in Tanzania. The fintech company was the front end, the startup was on the front end, the startup was managing the lifestyle or the user experience of the customers, of which, to my knowledge about that product, really increased the number of the banking customers significantly. You know, so to me, that is one of the key things that I learned from Nigeria. I think Tanzanian banks have so much to learn and leverage on the fintech startups in Tanzania. So I will advise my friend Esther, if a fintech comes to you, listen to them, understand, analyze your risk, find ways to control and manage those risks, and just be able to create new niche of customers based on the technology that they are offering. The banking as a commercial bank is highly regulated, but your products or the services you're offering, as long as your risks are properly managed, there's no obligation, there's no objection from the central bank, you can be able to offer these services. That's why mobile banking services expanded so fast, because mobile banking services are not regulated. But I remember then there was a letter of no objection from the bank. They understand the system, how it works. And that's why fintech companies then were able to penetrate and offer services to the bank as a fintech service provider. So in Nigeria, the banks were open, financial service providers were open to support the fintech companies to be able to offer these services. So, and the point is that we need to meet customer needs. You know, people want money, but they have needs to cater for with the money they want. So when we get to the needs, because let me give an example. My mom was a primary school teacher. And I remember then she would take a loan here and here so that we go to school and we have every resource we need. She had a salary, but I can guarantee 70% of our life was depending on microfinances loan or loan from the teachers, circles and stuff like that, because I saw that. And now that I'm into fintech, I'm into microfinancial services, I'm into this digital space, I'm having a lot of use cases that is kind of creating ideas for me even right now to execute products that maybe they're backed by the banks or the commercial banks or backed by the telcos to really make sure that they provide real life solution. One of the companies lately launched a micro saving solution. But I came to realize, even myself, I can't save. With the income I have, the lifestyle I have, I can't even put 10,000 on that product and let it stay for 30 days or 3 months. Because there's one day I'll just need to pay something, and the easiest way for me to get that money is to break that savings and sort my problem. But there's a product that will really fit my lifestyle to be able to sell. And those products are there. It's just about having a fintech company, linking to the bank, linking to, companies that are doing savings like UTT. UTT helps you save. It's a saving and investment institution. The banks can be there, the telcos can be there to ease into transaction, the banks backing it up, and the institutions there. So building this ecosystem, and this is what I really learned from Nigeria's fintechs, that they were creating marketplaces for financial services among different stakeholders, targeting and putting the customers at the center. This also happened on the agriculture sector. We have off-takers of korosho, of cotton, we know them. The government knows them, the regulator knows them. We have the input suppliers, the agro dealers, they are known, they are clear, In Tanzania, you can't sell your korosho in an open market like that. Even if you do in an open market, you still go to the AMCOs, the union, and the cashew board. That's already an ecosystem,
Yeah.
Putting technology, a fintech, to facilitate those transactions, creates transparency, creates visibility, is what is really needed. So this is what I got from Nigeria, and this is what personally I'm trying to work so hard with all the stakeholders in the fintech space to see how we can enable that, creating marketplaces for the financial sector that has really social and economic impact to the people involved. Thank you so much.
Thank you very much, Faith. One of our participants had his hand up. Patrick Gidaika, you've been enabled to speak. Unmute and address us.
Good afternoon, everybody. My name is Patrick Gidaika. First of all, I'd like to appreciate the organizers of this forum. Fintech is one of the emerging areas that is transformative within the African nations. I sit in the Africa Fintech Advisory Board. Work on the APIs and the payment gateways. But besides that, let me just go straight to my question. And this will cut across to Nzuli and the panelists as well. We are all aware sometimes innovation comes before the law. And I'll support my theory with what we know from the previous years. Discoveries like what was discovered, gravity, calculus, and the reflective telescope by Isaac Newton, to name a few. When it comes to the regulations that CBK wants to put in terms of managing the fintech space, I think being a booming entity that started way back in 2018, where we saw banks transform from an IT department to definitely becoming subsidiaries from tier 1 banks, building pipelines that help the tier 2 and the tier 3 financial space, and so many apps that have emerged from these small entities. And we can see the transformative that it has brought, the transformation that it has brought, especially during the COVID period, where CBK's report showed that the cash flow in terms of the liquidity was being pushed from the mobile platforms, that is M-Pesa and the likes. What roles as within the fintech space can really assist CBK for us to really play in the cutting edge, where we have a very huge say? Instead, it's the vice versa. We are building the technology, we are building the idea.
Patrick, we are
the regulation to invested. I can give a case in point. Sorry for that. Can you hear me? So
yes,
today in Kenya, or rather in Africa, escrow will serve a lot of SMEs to not lose their goods and have that faith that they can export and do imports. of their locally made products, where we can support Buy Kenya, Build Kenya perspective. But when you look at what CBK is, the regulations under escrow services are still quite tight, and yet we are allowing guys and entities like Bitcoin and the cryptocurrencies to thrive, whereas something like escrows can also help drive the business within the SME and create trust. Because if I'm selling a good, if I'm manufacturing an item and I want to sell it within the East African space, be it Tanzania, be it Uganda, I want, before my goods are released from my point of manufacturing point, at least I have an assurity that the money is within a suspense account through the escrow. By the time it's getting to the other end, the person is satisfied with the good and they release it. We have seen in Australia, they're doing that comfortably using different platforms like Wise. We have seen now in the US, Venmo is coming up very strongly. Just to name a bit of few fintechs that have emerged within the last 2 years, and they're thriving very well. So mine is just an input of that, because that's my key professionalism area, and trying to tell Africa, let's loosen the nuts of the bolts of the regulation before. Let's first let the technology thrive, and we see what it will happen and what transformation it will bring. If the regulations were too tight for M-Pesa back then, with the risks that we want to still remain on the life of writing checks, withdrawing cash, and the likes, I don't think we will be where we are today as an African benchmark to the rest of the G7 countries and the world of having a transformation point using mobile money. Thank you very much.
Thank you, Patrick, for your contribution. Nzilani, there's a question for you on the Q&A section from Jason Braganza. He's asking, governments are toying with both crypto and CBDCs. What advice would you give governments on either? And secondly, we have seen countries adopting crypto as an official medium of exchange. Does this affect monetary and fiscal policy? Nzilani?
Well, CBDCs are pegged on fiat currency. So it's digital currency whose value is based on fiat currency. So there's very little risk there, which we have seen because most governments are actually embracing it. With regard to crypto, the highest risk is actually on its volatility, issues around money laundering, and to a certain extent, consumer protection as well. More importantly for governments would be the volatility. So adoption of cryptocurrency by governments, in my opinion, at this point in time when crypto is very volatile, it would not be a good decision. However, there's nothing wrong with stable coins whose value is pegged on either fiat currency or on a product like oil, gold, and things like that. So I think with regard to impacting fiscal and monetary policies, volatility is a major issue. So it would not be a good idea for governments to adopt crypto at this point.
Thank you. There's another question directed still at you, Nzilani. You talked about, I'm reading from the Q&A section. Nzilani, you talked about POCAMLA. This is the Proceeds of Crime and Anti-Money Laundering Act. You talked about POCAMLA needs to keep in touch with fintech. How do we make the fintech industry see the importance of addressing the risks of illicit financial flows that emerge from crypto?
I think, first of all, the one big thing is already happening with the continuing crackdown on suspected money laundering transactions. That's sending a message to fintechs and anyone involved in payments and financial services that the law will be applied, and you need to do more internal monitoring, and you need to do your own internal reporting and flag any suspicious transactions. And if there's need to report, you need to do the reporting. Because POCAMLA has been, well, the definition of a reporting institution has actually been broadened. It means a lot of fintechs are actually captured as reporting institutions, or they could fit in one of the areas. A thing that the FRC does is actually give an opinion on whether you should be a reporting institution or not. So if you do want, if you're running a fintech and you're not sure you fall, you could simply write to FRC and find out if you should be reporting. But the other thing is just create awareness. I think central banks and the FRC and other institutions that regulate AML need to come out and create awareness. These are the things we expect fintechs to do, or anyone involved in financial reporting. This is what we consider money laundering. This is what you need to look out for. So awareness is also really important.
Thank you very much. We are now nearing the tail end of our webinar. So we'd like to get closing statements from our panelists, just a minute each. And since Zelani, you look like you are very ready to go, we'll start with you. Closing remarks, just 2 minutes at most. Unmute.
Okay, shortest time possible because I've run my own time before. I'd say there's a lot of room for fintech to grow, and there's a lot of room for regulation as well to allow fintechs to grow. I think it's a good point. I can't remember his name, but the person who last spoke said sometimes innovation comes before regulation, and I think that's also a very good way to look at it, because I don't think there will ever be a time regulation will go before innovation. It's always regulation, and then we react with innovation, and then we find ways to react to it. So there's room. Thank you.
Thank you. Esther Manasseh, your final remarks.
Thank you. Thanks, Angela, and everyone for actually giving me this opportunity. I think my final remarks are really around what fintech has been able to do. Fintechs have been able to really change the whole idea of client experience and solve real problems, like what Faith kept repeating. And I think for banks, there is an opportunity for banks to partner and view fintech not as competition, but as partners in solving for client problems. So banks should change their view towards fintechs and look at areas of common interest that they can work together. Thank you.
Thank you. Annette Casabelle, final remarks.
Thank you, Angela, and everyone else. I think similar to the previous speakers, I just wanted to highlight for some of us who work in this space as supporter of the innovation ecosystem, I would like to say fintech is here to stay. In our markets, in many of our markets, I think a lot of startups have just scratched the surface, and I guess kind of like understanding what Nzilani and other people who have talked about the regulatory framework, I think they are really giving regulators a bit of a headache on how to catch up. And I think it's quite positive seeing, yes, we do acknowledge the fact that the regulators are slow in our market a little bit, but it's understandable given the kind of like capacity constraint they work with. So I think it's still encouraging to see some of these regulators that are setting up sandboxes, or they're setting up innovation houses or innovation center to actually engage with the innovators to be able to kind of like draft policies or regulations or laws that respond to the market needs. So I'll put it at that. I mean, I think it's a space that requires a lot of like different skill sets and a lot of us to be actively involved in one way or another, or even inform ourselves, because it's here to stay. Thank you.
Thank you. Faith, final remarks? Faith, final remarks? Okay. Once again, to all our panelists, we really thank you for allowing us to share in the vast knowledge that you have. I think this has been, if I speak for myself, this has been a very, very enlightening webinar. To our attendees, we really thank you for showing up and for dedicating the time for us to gather here and to learn. So with that, we have come to the end of our webinar. We shall, we'll have the next one either in September or in maybe in August or in September, depending on the planning. And once again, we really thank you for your time and thank you for staying up to the end. There was very few attendees dropped off. So maybe we can take 2 minutes just to network on the chat section. I can see there are people who have introduced themselves. We have Eric Opio, legal sector financial specialist. We have Okumu Martin from NOAA, Regional Associate Advocates in Kigali. We have Fiona Nankunda, who also put a very informative comment on the chat section. Once again, members, we really appreciate your attendance. And with that, we have come to the end of our webinar. We have seen your comments on wanting the recording, so we shall liaise with the Secretariat and see how best the recording can be shared. So with that, for those of us who are in cold areas like Nairobi and Arusha, keep warm. For all those ones and for everybody else, take care of yourselves and be good and have a good afternoon. Thank you all.